Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin using logarithmic regression. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. We do have the sale running right now. Let's go ahead and jump in. So, Bitcoin can often be best described using logarithmic regression. And the reason we use logarithmic regression is because the more explosive gains tend to have occurred earlier on in Bitcoin's price history. And fundamentally, it makes sense. It is an expression of diminishing returns from one cycle to another. We do not see the same types of gains. Now, this specific logarithmic regression model we have used to navigate not only this cycle, but also the last cycle. And one of the things that I said, back in 2019 that we pointed out was that every cycle peak tends to occur 2.5 log lines below the prior peak. And we can verify that quite easily. You can see here, this peak occurred at the top red logarithmic regression trend line. The next peak occurred 2.5 log lines down. The next peak, go half 1, 2, occurred 2.5 log lines down. And so in 2019, you can find those videos if you want, but in 2019, 2020, we said the next peak could very well be 2.5 log lines down. It's one of the reasons why I said we're going to have diminishing returns, right? Why I said 300K is not a likely outcome last cycle. It's also not a likely outcome this cycle, although I know it will quickly become, a heavily viewed thing again. But assuming diminishing returns continues to take place, I would assume that it's sort of out of the realm of reach, even this cycle as well. And then if you look last cycle, it was sort of interesting because it seemed like we deviated from the 2.5 log line trend line, or 2.5 log line trend, because you can see we went down 1, 2, and then that's where we hit our April top. So I was sort of thinking like maybe it was no longer valid. But what's interesting is that we came back down, put in a higher high that ended up being exactly 2.5 log lines down. 1, 2, and then halfway through the green one. Pretty interesting, right? 2.5 log lines down. The issue right now is that 2.5 log lines down from where this peak was puts you half 1, 2. It puts you at this logarithmic regression trend line, which currently is only at around $45,000 to $46,000. So $45K to $46K. Now, that might sound somewhat disheartening to hear, but you also have to remember that normally we've seen these major peaks occur in Q4 of the post-halving year. So while it is true that 2.5 log lines down now is only about 45 to 46K, 2.5 log lines down in late 2025 would look a lot different. And we can actually project this out here on the website. So if you were to go look at the website, that's this trend line. So by late 2025, that would correspond to just north of 100K. Right, by late 2025. So while it might sound disheartening right now to hear that 2.5 log lines down would put you at 45 to 46K, just note that it's not really projecting a cycle peak by the end of 2023, although, anything can happen. It's projecting what 2.5 log lines would be down, in Q4 of the post-halving year. Is essentially how I would interpret something like this. Now, what's interesting is that last cycle we had a sort of a mid-cycle rally in 2019. It's kind of interesting that history tends to repeat in the sense that we had a rally in 2017 and in 2019 and in 2021 and now in 2023, right? It seems like every 2 years there's some type of rally, right? About every 2 years or so. And then in the year between, right, 2018 we saw a downtrend. 2020 it wasn't really a downtrend, but we had that secondary scare, right, that took us down into the log line. And we'll get to that part of the analysis in a minute. But if you look at what 2019 accomplished, it went almost up to where 2.5 log lines would be. It only missed it, in fact, by half a log line, right? It almost reached that middle green band. So the middle green band, which it hit in late 2021, it almost hit in 2019 and even wicked into that band. It was sort of like that mid-cycle pump before we had our secondary scare and brief recession. Now, what's interesting is that where we are right now is about half a log line away from 2.5 log lines down from this. So I think it's relevant to see what Bitcoin does here over the next couple of months with regards to these log lines. If Bitcoin were to rally up to 45 or 46K, that would correspond to the 2.5 log line rule. If it were not to rally any higher than it currently has and it tops out here, that would be sort of in line with what happened in 2019 in terms of topping out about half a log line down from what would eventually be the cycle peak where that occurred. Now, in terms of other views like the Bitcoin dominance and stuff, I'm still of the opinion that these rallies, just like in 2019, one of the things they're great for is that what you see happen is you see altcoins on their Bitcoin pairs tend to go lower, right? Now, not every altcoin does. There are always some that are popping off and going on some pretty interesting rallies, but through and through, the dominance of Bitcoin has just continued to go higher for 2.5 years when you exclude stablecoins, which is a very similar pattern that it exhibited in the prior cycle. It's sort of like in the stock market where the Magnificent Seven have basically held up the entire S&P 500. In fact, without the Magnificent Seven, the stock market returns this year have been pretty lackluster. The general idea is that people are seeking lower risk assets within the asset class that they're interested in. So if you're in equities, if you're an equity investor, then it tends to mean people fleeing lower market cap stuff for the blue chips of the asset class, like Apple, right? Like Apple. If you're an EV investor, it tends to mean that other EV companies are bleeding to the blue chip EV company, which is Tesla, arguably, right? And you can see that. I mean, maybe I'll do separate videos on that, but that's the same idea. And so in this case, what we've seen with crypto is instead of the Magnificent Seven, it's basically just the Magnificent One. It's the one asset where it's the highest market cap asset in crypto, and it continues to go higher even while many altcoins were putting in new lows just a few weeks ago. Now, I know that a lot of these altcoins have had pretty significant rallies over the last few weeks, but again, many of them put in a new low literally last month, right? I mean, like legitimately last month, a lot of these altcoins were putting in new lows on their USD pairs and their Bitcoin pairs. So when you look at the logarithmic regression tool, I still wonder if there is a rally up to this regression line, it would actually correspond to the 2.5 log line rule. We would just be hitting it a lot sooner than we hit in prior cycles. if that were to happen, I think it would break alt Bitcoin pairs down, meaning alts would drop on their Bitcoin valuations very quickly if Bitcoin were to get such a rally. If, on the other hand, it tops out here, which is where it topped out in 2019 in terms of half a log line down from the 2.5 log line rule, then you would still likely see alt Bitcoin pairs break down. Now, in addition to cycle highs, there has been one trend that I've previously pointed out, and of course is a somewhat polarizing view, but I will still mention it just because it's valid, I think, until proven otherwise. And that view is that every cycle we tend to find a low at one regression line, and then sometime before the halving, we visit the regression line below the one that we previously found our low at. So in this case, it corresponded to a higher low in price. But remember, Bitcoin, because it experiences diminishing returns, the early gains of Bitcoin were much more explosive. So the slope on the regression lines were much more, the angle of attack was a lot higher back then than it is today. So going down a log line, even though it was only half a year later, corresponded to a higher low. So you had a low, you had a higher low, but the higher low occurred at a log line that was lower than the first low. Then in the second cycle, and some people just actually, look at this cycle as one big cycle, which I think does have some merit. I'm not going to dispute that. I think there's all sorts of valid ways that we could interpret the market cycles of Bitcoin. And some people would even argue that there is no such thing as a market cycle, and they might have a valid point too. But in the next cycle, if you want to call it that, the low that Bitcoin hit at the end of this year-long bear market was at this log line, and then you can see it dropped down another log line here before the halving. And in this case, because it did so in the pre-halving year, it corresponded more or less to a double bottom. It even wicked below this line. But because it did it in the pre-halving year, it corresponded to a double bottom. The general idea, of course, is that, as money is printed and whatnot, the asset market cap as a whole should grow. So the longer the secondary scare takes, the more likely it ends up being a higher low if, in fact, the secondary scare occurs in the first place. The secondary scare that I've referred to before is this idea that does not have to pan out. And, I'm not going to sit here and say that it has to happen. But the general idea is that sometime before the halving, Bitcoin gets a 40 to 50% correction. Does it play out this time? I don't know. I really don't. I'm just looking at history and showing what has historically happened, and that sometime before the halving, you get a 40 to 50% correction in the price of Bitcoin. And some might say, well, last cycle was a black swan, therefore you should not count it. But I'm referring to a 50% correction even before the black swan took place, right? So every prior cycle, you had a 40 to 50% correction in Bitcoin just before that happened. One of the reasons that occurs, or it has historically occurred, is because everyone gets hyped up before the halving and everyone just sort of throws all their money in preparation for the halving. There ends up being some unforeseen event occurs. Everyone's super leveraged long. And then there ends up being some secondary scare where everyone gets wiped out just before the halving and just before, the money printing. We go back to QE and whatnot. So that's what has historically happened. I cannot promise you that it will happen again. I don't know if it will happen again or not. But what I am saying is that if you look from one cycle to another, you had one low at one regression band, and then the next low occurred at the lower regression band, and the same thing happened here as well. And it ended up being a double bottom. And then in the next cycle, the same thing happened again, where we bottomed out in 2018, but then we still went to a lower regression band in the halving year. And it corresponded to a higher low, right? It was a higher low, even though we went down another regression band. And so if you look at the current cycle and see what's going on, you can see that we bottomed out at this regression band, right? We bottomed out at this regression band right here. And I think what you look for is does it eventually go down to the lower regression band, just like all of the prior cycles that came before it. Now, the lower regression band currently corresponds to a price of $14,963. So it's around 15K, which is around where the prior low is. Again, I'm not saying that it has to go there. The longer that if we don't go there, the longer that the time goes on, this trend line will just continue to slowly go up, right? Just like it did over here. So the longer it takes, like if you assume that the secondary scare has to happen, which is probably a faulty assumption, but if you assume that it has to happen, then the longer that it takes for us to actually have it, the more likely it ends up being a higher low, right? Rather than like a double bottom or a lower low. Right now, if it were to happen today, this would tell us that it would be a lower low because it would be below 15.4K. If it happens like say 4 months from now, then it's more likely to be like a double bottom or a higher low, just like last cycle. So that I think is something relevant to look at, and I've mentioned that many times as well. So I think in terms of where we are in the cycle, we are getting somewhat close to the 2.5 log line rule. I pointed this out last cycle, and I honestly I didn't even want to believe it myself. At one point, it was very hard over here. I actually sold most of my Bitcoin over here in the first peak, and then I bought some back over here. And then when it went back up to the 2.5 log line area, I honestly didn't even want to believe it, right? Like I just didn't, because I thought that it had been broken right here, but eventually it did end up being 2.5 log lines down. So I'm not going to discount that this cycle. I would look for the 2.5 log line rule, which currently is this trend line, which we're still not at, and currently corresponds to about 46K, 45 to 46K. If we hit it when we normally hit it, in Q4 of the post-halving year, it would correspond to just over 100K. Okay? And you could always have a scenario where you tag it and then go down and then go up and tag it again 2 years later, right? That's a possibility as well, and something that I think we should consider too. But that is sort of the view on the logarithmic regression trend line. Right now, 2.5 log lines down puts you at 45 to 46K. By the end of the post-halving year, it'll correspond to just over $100,000. So the logarithmic regression rainbow, I think, has been useful, and it can be useful in identifying peaks as long as you remember it to allow for to go down a regression line each cycle at the lows, right? You can see that this one sort of bottomed out here. This one bottomed out at that level, right? So, I mean, the secondary scare went lower, but it bottomed out, price bottomed out at this regression line, then price bottomed out at that one, and then this cycle, it went down another log regression trend line. And this indicator has been on here for years, right? And then you had the secondary scare that came sometime before the halving. So that has historically happened. We will see if, in fact, it happens again. And we will also follow the 2.5 log line rule over the next couple of years to see how that plays out as well, and if it plays out in the same way that it has in prior cycles. So the reason that 300K becomes a difficult target to achieve this cycle is because 300K, which I already see get thrown around some in these price predictions, but 300K would correspond right now to the gray regression trend line, which is actually above the prior cycle's regression trend line high, which seems to be an unlikely scenario. Now, admittedly, in 2 years, it would not correspond to that one. It would probably correspond to one of these, but from one cycle to another, we've never gone to the prior trend line, right? We've always dropped down about 2.5 log lines. Last cycle, we did go down just 2 log lines in the first top, but then the actual top ended up being 2.5 log lines. So I think that's why a $300,000 Bitcoin is likely or is unlikely to happen this business cycle. Though in a few cycles, it certainly could be in the cards. So that is sort of the view on the logarithmic regression rainbow. We'll see how it shapes up here over the next couple of years, and we'll see if we get the secondary scare or not. Obviously, you should be hedged either way. And as I've said before, regardless of what Bitcoin does, the Bitcoin dominance should just slowly just continue to slowly trend higher, regardless. Because if we don't get a secondary scare, then Bitcoin leads the bull market. And if we do get the secondary scare, then Bitcoin minimizes your downside risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Thanks, and we'll see you guys next time. Bye.